What's going on, everybody? Welcome back to the channel. Today we are revisiting a very popular company that I've reviewed several times at the request of you guys. That is ticker symbol ASPN, Aspen Aerogels. It is currently trading around 776 as of this video. When I last recorded it, it was a falling knife. Literally, the candles were just bleeding down the screen. We drew up some supports and resistances, and this trend, we have to get to, we have to at least get to 620. Lo and behold, the stock went right exactly where those were. I was calling for around mid sixes. The stock got down to the fours. Looking at our charts here, which I'm going to show in just a moment, the daily chart looks like one huge consolidation. The weekly chart actually does not look too horrible. Not another, but it just looks like a more spread out consolidation period. And then our monthly chart looks absolutely insane with these two large peaks and the stock breaking out here what looks like to be very soon. So we're going to go ahead and run the proprietary stock price calculation, and we'll compare it to what I had for the last video to see if the company has added value, whether it is in revenues, profits, lowering the debt, etc., and see if this company is actually doing better. It is from a visual perspective and where the company was from when I was looking at it, the falling knife has consolidated and it does look like it is regaining its healthy posture. So we'll calculate the stock price. We'll look and see if institutions are buying or selling. And we'll also perform charting analysis, which is the bread and the butter on how we're going to determine where the stock might be going. And the last thing we're going to do, the hardest of all, hitting the subscribe button. All right, let's jump in. All right, we are looking at ticker symbol ASPN, that is Aspen Aerogels. If you've never seen a stock chart before, this is what it looks like. It is consisting of a red or green Japanese candlesticks. Red candlesticks indicate that it was a negative day. Green candlesticks indicate that it was a positive day. These candlesticks give us a hint of what we can expect for the next following day or candle. For example, this candle right here with a long upper wick it shows that it is going to be negative. You could see that there was not demand here. People sold off up here. So the supply became more available. People continued to sell and it's basically softened through here. We could see on this gap right here, the stock sold off so fast. It was 12 million shares that the stock opened the next day down 15-20%. So a lot to learn here. Stick around and things will start to make sense as we go along. And what I was talking about, the weekly chart, the major consolidation that we were seeing, look at this consolidation here. This was years worth, and now this is where we are over here. It's not a bad thing. It's actually pretty good. And then our monthly chart, which I was just talking about, is absolutely crazy. We are getting to an apex where we have our resistance line here from our top candle nudged up against this line. So we are going to see some fireworks here soon. To the upside or the downside, we'll determine that. But let's look at the most important piece. That's going to be calculating the stock price. Things that we want to note. Quick ratio looks good. Debt overall looks good. Earnings per share year over year for the trailing 12 months, negative 3,810,800%. Not good. Earnings per share this year, negative 2,000%. Next year, expecting 100% EPS. Institutions look like they're selling. We're going to double check that. Gross margins, 36%. Not bad. So let's break this down and add this to our calculation here. Now, a little background here. This was built for small cap companies. Think of your Amazon that was in a garage, Microsoft that started in a garage. All these companies that started off in a garage, companies that are not even public, that are in their very first rounds of being a startup and getting at funds. So essentially, market cap is non-existent unless it's over 1 billion. I don't like to add it. However, when we have companies like this where it's kind of in the 3, 4, 5, 600 plus, I do include the market cap, but I do not like to add it until the end because the market cap is important. But if we are getting a high valuation without the market cap, it shows that this stock could be extremely undervalued and extremely desirable. So we're going to go ahead and do that. We're going to calculate this without the market cap first, and then we're going to add it on top. So our income here is going to be negative 311,910,000. That is not a good way to start. Sales is 397,180,000. Cutting it very close there. Now cash and debt. Let's go here. Cash, they have 168 million, thank goodness. That is going to save them. 168 million, 30,000. Their debt, 138 million, 320,000. Not good. That is not good. Total assets, 525 million. Total liabilities, 216 million. So assets dwarf liabilities 2 to 1. That is very good. President CEO bought some stock back in May of this year, $100,000 worth. And we got Daniel Santosh, the accountant, selling around $50,000 worth. Looks like he was an officer. Oh, okay. CAO officer. So he might have got promoted, but I don't think so because look at the dates. Anyway, he sold off some stock. No red flags here, really. But we do like to see we do like to see insiders buying their stock because it shows that they know it's undervalued. We want to see large purchases. When we see like a CEO buying $100,000 worth, it's probably not that much to him, so not a huge benefit or pro there. Lots of good green here, so we'll check in on that here soon, but let's finish our calculation. All right, our shares outstanding, 82,250,000. It's gonna be $1 penny stock. Yeah, $1.40 is the price if we do not include the market cap, which is not that great. It goes to show that this stock is likely not that attractive. Analysts have a price target of 958. When we include the market cap of 639,120,000, we get a stock price of $9.17. So the shares outstanding 82,040,000. Potential stock price of $6.30. However, if we do include the market cap, typically I exclude the market cap, and this calculation's made for like micro cap companies that are like your next Amazon, Tesla, Microsoft that came from a garage. Typically we don't account for it, but this is worst case scenario 630, and then probably best case scenario is going to be this $13.91. Analysts have it at $16. I say the trend is your friend until the end. This trend, we have to at least get to 620. A little bit under the analyst price target. Not too bad. Institutions, old data shows that they own 87%. I'm going to say probably more. 98%. So institutions have been buying. We can see it's been going up over here. I just want to see if we have any recent big buys here. Oh, yeah. New position by Invesco. We got a big short here. First Eagle small cap, 35,000 shares. I don't see a lot of companies shorting. Vanguard has a short. First Trust sold out. There's only a couple big companies shorting this one. Godspeed to them. The company is technically undervalued, but forward B, if you're a old-time investor where you're just someone who wants to see a PE like Warren Buffett type style, this one is not in your bucket. So now we have to go to our bread and butter here. Aspen Aerogels literally came down in this channel. It's been staying above this channel. Literally, it kissed this purple channel right there. One thing I do see that is a potential concern is a bear flag. So we've got our flagpole here. I'll make it a different color so everybody can see it. I'll make it this color, I guess. So there's our flagpole, this reddish looking line, and then we have our flag from there to there. So we might see the stock potentially bounce up to 1054. However, we have to be very careful because if it does, if they do have a bad earnings, when is their earnings call? Let's see. November 5th. That's very soon. There's a high chance this could go down to the 350 range. And I would not be surprised. Honestly, I would, like I said in my last video, I would encourage it because it would allow it to come down here. And then we have this huge resistance going all the way back to 2021. And if the stock could consolidate down in this area before trying to break this channel here, that would be massive. So are they trending in the right direction in terms of data? Let's see. Quick ratio is decreasing on a quarter basis. That's fine. Gross margins increasing. Gross profit. Let's go to the annual here. Gross profit. 56 million in 2023, 180 million in 2024. I think they get pretty close or further to beating that. Profitability, not good here, but let's see what happened. Huge hit right here. I'm guessing they may have made a large expense, potentially to better the company. I don't know. So that if you're are interested in this company, that'd be something to look at into their Q1 earnings report. What did they purchase that that caused that huge hit? Let's just see. Acquire, no. Buy, no. That's not gonna give us anything. Anyway, I'm more of a chart person, and the chart typically tells you the story, but that's something to look into. Could be a tariff thing as well. Here we go. Navigating challenges. So yeah, I would err on the side of caution here. I think coming down between 8 and 3 would be healthy. Again, this is a pretty juicy company, mainly based on the market cap, which is fine. I just don't know if the company's really killing it in terms of revenues. So, getting back in this channel, that would be fantastic, but we want it to go back in this channel with strength. Last month, there was 32 million shares traded. This month, 3 days in so far, 5 million. If we 10x that, there'd be about 50 million shares traded for the month of October. So we could see a nice move back into this channel, which would be pretty good. So again, just err on the side of caution. I would not be getting into this one just yet. Yeah, I would just potentially be on the side. But it is undervalued based on market cap here. If the market cap takes a hit, 300,000, let's just bring it down. If the stock were to fall 50% tomorrow, $5 would still be the range. So we have really strong support in this $5 range, which we literally saw the falling knife stop in. Nice bounce out. It's having an issue here. But again, we also see a We're doing it. We see this nice setup here. Gosh, see, like we're getting so many mixed messages on this one. Man, I'm on the side. I'm not sure where the company is going to fall in terms of earnings, but we also have a potential bull flag here. Very extended bull flag. Let's zoom in on it. Let's edit this channel. We'll make it greenish and thick. So there's our flag pole and then our flag here. Yeah, it's kind of hard to draw at this angle, but so yeah, here's our flag pole and here's our flag area. A break up. Again, we could probably see the tens. However, we're still in that bear flag range. So very, very conflicting chart here. Last video I did, the stock was targeting around $6.30 as the target. Now we're at $9 based on our current market cap, which is fine. I mean, it just goes to show that there has been more value added from the big money. So yeah, this one looks neutral. I guess neutral is the best way to put this. If you have time, I would say over the next couple of years and you don't mind your money going up or down, this could be something to consider. But yeah, I don't have too strong of a feeling either way on this one. If you made it this far, let me know what you guys think. I appreciate you.